I'm doing the daily recap for London today, so we'll start in the weekly. You can see the weekly's bearish. We have been making lower lows and lower highs the whole way down. We reacted from this sort of inside bar demand, pushed back up, but then we mitigated this sort of flip zone at the most recent break of structure. So it was always likely we were going to see a pretty decent reaction from it. This low is weak as it failed to print a new high, so I would expect at a minimum that eventually this will be run. But obviously the weekly takes quite a long time to play out. It's not something I usually pay too much attention to. So there's obviously lots of opportunities you can take on the lower time frames for buys and sells within a weekly sort of range. But yeah, it's bearish, and the expectation is that this weekly high or weekly low will be run, and after mitigating this basically supply at the EQ. On the daily then, the daily's bearish as well. This is the range, that's the high, that's the low. We pull back to basically mitigate this supply at the EQ. It's a strong supply zone. Buy to sell candle caused the most recent boss, so it's unsurprising that we got a good reaction from it. It's at the EQ as well, so it's likely the higher time frame objective has been completed. Now, this is a weak low as it failed to put in a new swing high, but you can see we're getting a pretty decent reaction from this wick. So I wouldn't expect this demand to put in a new internal high or a new swing higher on it, but it's very likely you might get a pullback into one of these supply zones, and that we can take advantage of that on the lower time frames. So in summary, the daily's bearish. The expectation is that this will be run, but we may pull back into one of these supply zones, and that might give us some short-term buys in the lower time frames. Now on the 4 hour, you can see here we mitigated this sort of 4 hour wick. It was the only sort of unrefined demand that made sense. It swept liquidity behind this low as well. Yeah, here after mitigating that, we swept that sort of low, and then we got the bullish 4 hour chalk. So when you get a bullish 4 hour chalk, you can anticipate 4 hour pullback. Yeah, and then you can see this demand, it's not the clearest, but if you take even the whole range, that's the demand that caused the chalk. So it's not surprising then that price pulled back into it and is continuing higher. We did get a decent reaction from this wick, but as the internal structure remained bullish, it was always likely to just be a pullback to facilitate the mitigation of the demand. So you could have taken advantage of some short-term sells from there if it was within your time zone or whatever, but the expectation always was that once it switched bullish, the internal structure switched bullish, that was likely to fill up demand and continue higher. Yeah, the pullback depends. It's hard to tell how far it's going to go, but it could mitigate one of these sort of 4 hour POIs. Ideally, one nested within the daily. But yeah, the expectation is again that this low will be run because it hasn't achieved on one. But again, we're currently trying to play the 4 hour pullback after the 4 hour chalk, so it does make sense. On the M15. You can see we mitigated the daily and the 4 hour demand. We just mitigated this. We just missed this M15 demand, and then but we had this V-shaped recovery, bullish M15 chalk, supply failing, and then see we sort of have this demand chain as well. If you take this whole sort of buy to sell range, you can see or sell to buy range, pulled back in, mitigated it, pushed up, pulled back in, mitigated this, and then basically reacted to this supply pullback, reaction failed, creating a flip zone. Now there's this big gap up at market open, likely caused by news or something. The fact that news announcements, there's usually no inducement whatsoever in the day because it's just a straight push up in all time frames. Like even if you go to the 5 seconds, there's unlikely to even be any structure there that can be used as inducement. So although this was a flip zone, caused the boss, I didn't have that much conviction at holding because of the lack of inducement. Now when I came to the desk this morning, I think we were just sitting about here. I know some of you were looking for buys after this iChalk. That's pretty low probability to me. It makes sense in a way because you had the iChalk coming off this M15 flip zone, so it does make sense. But at this point, supply was clearly in control. We were pushing down, we pull back, so that there's your full supply range. we put in a new sort of internal low, and then we pull back into this. So I'm not a massive fan of trading against the M15 order flow. I would rather sort of wait for it to change before looking to trade against it. And we mitigated this flip zone, as I said, and then we sort of pull back in to mitigate this M15 supply. Order flow was bearish, supply was in control, so it made sense to the price might continue lower and maybe mitigate, maybe run this and use it as inducement for maybe something within here or down towards here. But after we got this sort of eye chalk or eye boss, whatever you want to call it here, I was looking for sells from this supply basically that caused the eye boss. It wasn't ideal that price didn't close below, but it was enough to sort of signify to me that order flow was still bearish. Now after sort of we pushed into this, got a decent reaction away, but the reaction failed to sort of put in a new internal low even. So after this whole sort of supply range failed, at that point I was basically saying, right, demand is taking control, supply has failed, and internal and swing and the M15 are both bullish. 4 hour internal is bullish. So I had a high conviction that this M15 high was going to be running at a minimum as part of the 4 hour pullback. So I was sort of happy to look for aggressive M1 continuations in here, knowing that EU when it goes, and we had a lot of momentum here, when it goes, it doesn't necessarily have to pull back to one of these zones. Like ideally it would have pulled back to this flip zone before going, or even that one there, but EU doesn't tend to do that as often as some of the other pairs. So I was happy to be more aggressive, so I'll drop the M1 just to cover some of the potential entries. I know some of you were looking for the buy here. Now it makes sense, but this M15 POI had already been mitigated twice. Internal or order flow was bearish, so you're trading against the order flow, but granted you're trading with the M15 swinging internal and the 4 hour internal, so it does make sense. The M15 POI had already been mitigated and failed to put a new high, so I wasn't, for that reason I didn't have a massive conviction at holding, and the lack of inducement as well on the M15. You can see that straight push up in the M1 again. For that reason I had a pretty, I don't want to say strong conviction, but I had a hunch that it was going to run these lows basically, maybe mitigate some within here to use the low as inducement. So that's not something I would have been looking to take, but it makes sense in isolation. You have the V-shaped recovery, flip, chalk there. But then what really would have put me off is before price even came back down here to mitigate this entry on the flip, and the flip didn't sweep, there was like equal lows behind as well, but it had mitigated this M15 supply, and you have to remember that the order flow is bearish, so you're trading directly against that. Now I actually took the short here on the flip. You can see we mitigated this M15 POI, we pushed down there, but the demand held, pushed up, mitigated the POI again, sweep, V-shaped recovery. I'll zoom in on this a bit more. Clear flip where you reacted to that demand, failed. It swept behind the inside bar, so I was happy enough to enter on the chalk, but it's not ideal. The inside bar as a sweep of liquidity, ideally you would want to see something pretty clear like that there, sort of see a clear internal high get taken out, but it's still enough to count as a sweep for me. So pretty quick loss there. I was then looking at maybe, after taking the loss there, I was aware that we could continue from like these wicks or something, but I wasn't really happy setting the limit on them after taking the loss, so I was sort of waiting for a confirmation entry. And obviously price just smashed straight up through, so didn't get it. Here at this stage, after we sort of smashed out of this sort of whole supply range, it meant the order flow was on our side, the M15 swinging internal was on our side, and the 4 hour internal was on our side. So I was happy enough to look for aggressive M1 continuations. Now I'm still sort of mastering these myself, so this might be the best one in the world, but it made sense to me. We came into the M15 supply, had this sort of, it was technically an M1 chalk, but I sort of have marked on as liquidity sweep there. So after that chalk, this became valid supply, so we pulled back up into the supply, failed to take the high, or the supply failed to basically put in a new low, reacted to this demand, and then the reaction failed. So at this point you have a demand chain basically there, that held. This is your fresh demand that you're entering on, that held. You have two sweeps, swept behind the inside bar, sweep there, and yeah, that's your entry. So basically the M1 entry model, as I understand it, is liquidation, mitigation, and flip. So we had the sweep, had the mitigation, and we had the flip. So it made sense to me. Now, it's not ideal that you're trading in M15 supply, but the M15 supply caused nothing. And M15 swinging and turning are both bullish, 4-hour and turning was bullish, so I was happy enough to sort of trade against that when the entry model set up within it. Yeah, and that's that. I thought I was actually going I take 4%, I take 25% off at 4-hour, so I actually thought I was going to get run here. I got it to break even pretty quickly, just around there. And then whenever it came back down here, whenever I saw these equals building, I thought I was going to get smashed, but managed to stay in. And yeah, it's a pretty nice trade. It just goes to show you the power of building the sort of story. You know, when you have the order flow and the structure both on your side in the M15, you can be more aggressive with the M1 continuations in anticipation of the weak structure getting run. But it's when you're sort of trading counter order flow, pro structure, you know, it's easy to get sort of mixed up. But yeah, that was it. It was a pretty decent session overall. I'm happy with that loss. It made sense at the time. That I went through why that buy was too aggressive for me, and then sort of more aggressive M1 continuation. As I say, I'm still learning, so maybe somebody who's more well versed in than me will tell me that's absolutely terrible, but I was happy enough to sort of take the risk at the time. Hopefully you take some value from this. As I say, it's my first time doing like a sort of market recap, so if you bear with me, hopefully it made a bit of sense. But yeah, if you have any feedback or any questions, just drop me a message in Discord or put it in one of the channels or whatever. I'll get back to you. Alright, thanks guys.